In today's video, we are breaking down the basics of accounting so you can feel confident in your business finances. Let's start with what is accounting. Accounting is the process of tracking your business money. That is the money that is coming in, money that goes out, and what is left. It simply involves recording, organizing, and summarizing your financial transactions. Let's think of it as a business way of telling its financial story. So, why is accounting important for small business owners? Number one, it helps you to stay focused for taxes, as you know that's a big deal, help you make smart decisions, and also plan for the future of your business. Number two, even if you're not an accountant, understanding the basics of accounting can really save you a lot of money and stress. Number three, accounting shows whether your business is growing or struggling. What are the key accounting terms that you should know? Number one, you have assets. Assets are simply what the business owns. For example, you have cash, we have equipment, we have inventory. Number two, we have liabilities. These are simply what your business owes. It owes to someone. For example, we have loans, we have credits, we have unpaid bills. Number three, we have equity. Equity is your take home. It is what remains after liabilities are deducted or subtracted from assets. That what is remaining is what is called your own equity. Number four, we have income. Income is simply what your business earns from selling products or services. So what you get paid by a client or a customer, that is what we call income. Number five, we have expenses. Expenses are simply the cost of running your business. For example, you have rent, supplies, salaries, and so forth. It is in short what you incur to make your business continue running. Then number six, we have profits. Profits are simply what is left after subtracting expenses from your income. That is what you take home. We call it profit. Let me give you a simple example so that you can understand what I'm saying. We have two columns here. Number one, for example, you start a business with $5,000 in your bank. That is called asset worth 5,000. Then you buy supplies worth $1,500. That is an expense you have incurred from your business. Then you sell products and earn 3,000. We call that income of $3,000. Then your profit or your final profit is simply $1,500. How do we get that? We said profit is equals to income minus expenses. So 3,000 minus 1,500 the expenses, we get a profit of $1,500. So let's recap on today's session. Number one, I have shared what is accounting and why it matters. Number two, I've shared the key accounting terms. Number three, I've shared a simple example showing how the key accounting terms apply. And lastly, I've shown how accounting helps you understand, organize, and grow your business. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss a simple step to keep your books in order. This is RM Accounting Solutions, where bookkeeping is made easy for small businesses. See you in the next video.